Right on. Thank you so much, Tide. Guys, it's great to be with you here today, traders, to go over a quick snapshot of technical analysis, riding trends with support and resistance. I'm going to take just a moment to show two quick disclaimers, and then we will jump right in. Okay, traders. So let's jump right in. Again, it's a pleasure to be with you all here at the Nadex Bootcamp. I love doing these events and really just getting some back and forth with you guys. I'm going to go over some basic concepts that that I've used in my trading since almost 20 years now. Topics that will be discussed today: horizontal or lateral levels of support resistance. Very important. Oftentimes the most misused objective type of look at price action. Levels that give you significance, whether it's a high or a low. I'll map out exactly what I'm talking about by lateral levels. We'll take a range and a look into Fibonacci. A lot of you guys know Fibonacci, have used Fibonacci, but one thing I always want to stress is when you're developing a trading strategy, it's kind of like baking some bread, right? You can't make the bread with flour alone, can't make it with yeast alone, can't make it with water alone, but when you mix the two or the three, right, you get a result. It's the same with trading. Horizontal levels in and of itself ain't going to cut it. Fibonacci in and of itself, not a strategy. Slope in and of itself, not a strategy alone. But when you combine these levels, or when you combine these techniques, it can really help you identify some major market moves and potential trades that you can get into. So first things first, I'm going to take a quick look into horizontal and lateral levels. What are horizontal or lateral levels? Well, there's a couple different things I often will look at. Here they are: major highs, major lows, whether it's a monthly, the yearly, or even a weekly, can oftentimes give you a level of support resistance. Year, month, week opens doesn't tend to catch too much headlines, but these also can be very critical levels. I'll show you one that's playing out right now in Bitcoin. The high close or the low close on a daily and weekly level specifically are extremely important. Remember, what are we doing when we're looking at technical analysis? What exactly is it? It's a study of crowd psychology, crowd sentiment, right? And so we have to keep that in mind. Where the market closes a daily or a weekly candle matters. It's where the market has found consensus, right? We pushed this high, we dragged this low, but we closed the market on that level. Can be very, very critical levels to trade. So I often will see this in my reports on daily effects: HDC, high day close, low day close, high week close, low week close. Tend to be very, very important. Daily reversal, resistance and support. Okay, a day on a reversal from the previous day where that candle closes can oftentimes be a horizontal or lateral level of support and resistance. Again, not very popular. You don't hear it talked about too much, but I can show you time and time again of when these have offered really nice inflections in price. Long-term moving averages shouldn't be anything new to any of you guys here in the room. 100, 200 day, your 52 week, your 200 week moving averages. Those are the kind of main four I'll follow. And then opening range highs and lows. So the concept of opening ranges is looking for the market to set a high and a low in the first X amount of time. Okay, so if we're looking at the weekly opening range, you're usually looking for that Sunday, Monday, maybe Tuesday, high, low, or low, high, low. Then you look for a break of that to give you the directional bias. I've done a whole series on how to really implement the opening range strategies. And for anyone who's new to the room here, just a quick note, I have a Foundations of Technical Analysis series that goes over all of these things on Daily FX. I'll provide the link for you right here in the box. If you'd like to see these a little bit more described in detail, do feel free to click on that and go through that course. So those are the lateral levels, the main levels I'll map out whenever we're looking to sort of identify what price action is doing. Next up, a quick look at Fibonacci. people can't talk enough about this. You know, it's a very popular overlay indicator. The basic concept is right here for you guys. Don't spend too much time on this, but a lot of people like to know, where does that sequence come from? Here's the Fibonacci sequence that we all know and love. Each number is just the addition of the two previous numbers. And if you get far out into it, each number in the series is 1.618, the previous number. For those of you math nerds out there like me, if you know Pascal's triangle, again, similar, very rudimentary formation, the diagonals will actually give you the same Fibonacci sequence. So what is that? Excuse me. So what is that? Well, the Fibonacci ratio actually appears everywhere in nature. It's not something man-made. You can find it in the ratios of snail and nautilus shells, waves, for those of you surfers out there, sunflower florets, galaxy formations. The measurement of the human body will have Fibonacci ratios all over it. So that's just where the concept comes from. What are the two Fibonacci, tools that we use? One of them is retracements, and the other one is an extension. The retracement is more for range-bound markets, or on an immediate run or immediate drop. You're looking to fade the move or trade within the range. You're looking for levels where the market might find support on a corrective pullback or resistance. And it's using two reference points, right? A simple high, simple low. That's what you're looking for. You look for the fib sequence in between. In real strong trending markets, or when you have a breakout scenario, the extensions will help identify where price is likely to find support or resistance outside of the zone you're in, right? So it's a little bit different of an animal. This will use three reference points. Again, on a bullish sequence, you're looking for a low, high, low, excuse me. On a bearish sequence, you're looking for a high, low, high. And again, guys, I'm going to show you examples of all this in just a moment. So Eric, with regard to your question, how do I set up support and resistance? So these are the makings of it, right? These are how we're first mapping out the lateral levels, whether it's the previous stuff that we talked about with the highs, lows, opens, daily reversal candles. Those are lateral levels. Fibonacci will give you lateral levels. And here's how it works. Here's just a basic example of a Fibonacci sequence I played out in Euro Dollar a couple of years back. 2017 saw a ripper. We maxed out right just ahead of that 26 handle. Then you saw a basic technical formation, right? Wedge pattern, consolidation pattern. Once this breaks, I have conviction that that's a high. So you go ahead and apply a trend line, or excuse me, a Fibonacci retracement from the low to the high, and it's going to give you these levels. Again, these are just sheer Fibonacci ratios, objective stuff. So your first support zone here, Eric, in this example, would be 2035. You're looking for a reaction there. If you're holding shorts, maybe on a drop there, you take a little off. You drop your stops to break even or better. If that breaks, the first major Fibonacci ratio, in my humble opinion, guys, 236s, I tend not to give too much credence to. However, when the ratio overlaps a major high or low, which here we have the high day close or the high week close, then it's important. Even if it breaks, what's important to look for? What price does after the break. Anytime price is breaking a support or a resistance level, you don't want to see a meandering trade, right? I don't want to see price dribble down. I want to see a decisive break. And that's what you got here. When it broke, it ran right through, was a solid weekly close below. Your next level of interest is the 38.2. Guess what? The 38.2 now has broken and closed a weekly close below. That means more or less I should be looking for resistance now at that 38.2 once it breaks, right? And for the next couple of weeks, basically price was failing. You got a couple of false breaks in areas, but you can see finally ended up hitting on the 618 retracement. Now for this primary example, that ended up being actually a near-term low in pricing. You saw a pop before another drop, but just a primary simple example of how to apply basic fibs. Now you might be thinking to yourself, well, Mike, how do you know here if it's breaking lower or not? How do you know here if it's breaking higher or not? This is why I say every technical indicator you're using is just one part of the strategy. I can't trade with just Fibonacci. I mean, I could. I don't know how successful you'd be, but it's just one part of the strategy. It's like a car. You can't trade with just the wheels or the handle, you know, the steering wheel or the shifter. You need all of them together. So again, this is kind of the guardrails of basic Fibonacci sequences. An example of a Fibonacci extension is something more like this. This played out in Euro Pound a couple of years back as well. It was a weekly massive multi-year consolidation. We were seeing higher lows and lower highs, but a major lateral resistance level was right here. For the purposes of this example, I just wanted to focus with you guys on the consolidation. Since lateral resistance held, we were looking for a downside break. Now, how do I know once the break is legitimate? And what are the targets when it does break? That's where the extension comes in. Okay, you take your high, low, high, and here are your Fibonacci sequences. Your 38.2 at 87.80, the 50%, which is not a true fib, but oftentimes markets will retrace half the move. Okay, so we'll talk about confluence ranges in a moment. That's probably the most important thing of everything we discuss here. But here's what it looks like. And here's how it played out. The 50 converged on that trend line. What do we say? When it breaks, if it's a true trend line resistance or support break, we should see an acceleration, right? I don't want to see this thing meander. If it's going to break 87.50 and it closes below, I want to see that shot go lower. Well, lo and behold, this was actually obviously a cherry-picked example, but it slammed right through the 618 and completed 100% extension. So for those of you out there who are Elliott wave fans or you practice Elliott wave theory, typically trend corrections will come in 2 equal legs. That ended up being a pretty decent low for another bounce in Euro Pound. Some questions here about Fibos. Abraham is asking, can we discuss the retracement levels of 86.4 and 746? Good question. Haven't got asked that in a while. It's very interesting, guys. The 763, 764, these are not true fibs. The true fib is actually the 786. That's what I use more often. The 763 is actually just 1 minus the 236. They're all derivations of the same. I don't use 86.4, Abraham, but I do use the 88.6 retracement, which is again just another the square root of 786. They're all connected via mathematical artistry. I'll just say that. But the major ones that you want to focus on, Ibrahim, are always going to be your 618s. On extensions, the 100 is very effective in identifying whether a trend pullback was just corrective or if it's a larger reversal. And again, I will show you live examples of all this stuff in just a moment. Maxwell saying, is it possible to adjust your settings so that the letters are more visible? I can't. Sorry about that. Try maximizing the screen, Max. Might help. Angel saying, what was the site he said we can go to for more on trends? It was the Foundations of Technical Analysis. Again, I'll drop that one more time in the chat box there for you. Just check your chat box. All right, so those are fibs, okay? One of my biggest or the most important aspect of my analysis actually is just basic trend lines. Okay, can you draw Fibonacci numbers on Nadex charts? Absolutely, I'm pretty sure you can do that, Mark, no worries on that. So, trend lines. What are trend lines? How do I use them? How do I identify what's a real trend line and what's a fictitious trend line? So, what we're looking to do with trend lines is we're looking to identify the gradient or the plane the market is traveling on. I oftentimes will call it slope. It's basically the angle of attack, how sharp the move or the trend is, whether it's to the downside or the upside. We're always looking to identify the original slope. So again, basic lows, basic highs, right? Parallels of that will oftentimes give you beautiful inflection points. Okay, Eric's saying, yes, we're getting into the sauce. I got you, brother. We're gonna get into it real deep. Pitchforks, I get asked about most. For those of you who don't know, I host the weekly strategy webinar on daily effects every morning at 8:30 Eastern. We go over what are the setups that we're looking for in the week ahead. Pitchforks is something I get questioned on very often, and I'm going to spend some time here with you guys just going over how to do that. So basics on trend lines. Any 2 points can make a trend line, guys. I can tell, or I can pick any 2 highs in price, any 2 lows in price to make a trend line. Doesn't mean anything until the 3rd test. Okay, and that's the thing that a lot of traders will sort of dismiss. They'll draw a trend line here. Here's 2 levels it broke. They'll draw a trend line here, but then the break fizzles out, right? Any 2 levels can make you a trend line. There's no validation, there's no conviction until the 3rd test. And in fact, every subsequent test, the more times that trend line holds, the more aggressive, the more important it is when it breaks that this slope will offer resistance. Point in fact, in this dollar index currency, that's exactly what happened. We tested that trend line for a 5th time, gapped below it, was resistance, was resistance, was resistance, and you're moving lower. So I saw a question earlier. I think you were asking about how you're executing the trades, right? Or how do you know when you want to execute the trade? One thing you always want to keep in mind, if we're in an uptrend, we really don't want to get aggressively against that trend until we see some sort of uptrend break. Same thing on a downtrend. If you were trading this slope here, you don't really want to do anything to try to fight. The trend is your friend until you break that move. And again, I'll show you some really good examples of that in a moment as well, Jimmy, with your question on how to identify tops and bottoms. The first rule of thumb, Jimmy, is that we need to break uptrend support. Now, with regards to retracements, when those retracements converge on slope, those are the money trades. And I'll show you a couple of examples of those in a moment. So not only did this trend line support break offer resistance, but it's important to note that it will continue to offer resistance. And that's why we call this the slope, or the original slope of the trend. Every recovery, if this is legit, should fail along that plane. Well, failed once, failed twice, on the 3rd time ripped. Then what happened? Guys, that same slope was now support, support, support. So keeping that gradient in focus. The longer term the chart, the more emphasis is on that trend line. If you're drawing trend lines on a 5-minute chart, there's actually merit to that, but it's not necessarily something you want to use as a trigger, right? These are the longer term sort of basis for where we identify what our trend is. And one other thing I just want to talk about, guys, we always talk about magnitudes of trend, right? A lot of people ask, well, Mike, what's the best chart to look at to do your analysis? That is a loaded question, okay? Think of your analysis as a map. I'm in New York. I want to go see my brother in LA, okay? I know I need to head west. That's my weekly chart. I'm heading west. I need to know out of my driveway, what's the major artery I need? Do I need to get on I-95? Do I need to get in the Garden State Parkway? Where am I going? That's your daily chart, right? You might need to go a little north before you head west. Now, what am I going to do right here? Do I make a right or left out of my driveway? That's your intraday chart, okay? Telling you what you're doing on the immediate front. So you can't discount any one of those time frames. If you don't know what's happening on the weekly, then you probably don't know what's really going on the daily. If you don't know what's going on the daily and you're trading on just near term, you got better luck shooting darts. So just a little tidbit there as far as multi-time frame analysis. I saw that question earlier. So back to business here on slope. Here's an example on the Aussie dollar. Again, a few years back, 2 points of reference gave us this uptrend. So I don't know if there's any merit to this slope yet. But if I take a parallel of that slope and I extend it off the low, it's telling me that if the market pulls back, this is where I should be looking for support along this plane. Well, guess what? That's exactly where the decline did find support, and we launched higher. The question becomes, is there a way that I could have derived this gradient before this high came in? Because I missed out on the whole rally, right? And that's where a pitchfork can be very helpful. This is the same trade. Forget everything from here and just focus on this part. Basic uptrend. You're looking at low, high, low constructed this pitchfork, which caught the high. The pullback, once it broke the median line, you're looking for a drop into the lower parallel. That caught the low. Once we rebound off of uptrend support, we're looking for a rally back into the median line. That's resistance. Once, twice, thrice, fails that resistance, should be looking for a drop into support. And that's all it is. There's no witchcraft at play here. People are always asking, how do you know the reference points, the proper low, high, low? I don't want you to stress that. You should be stressing the slope, not the 3 points per se. It's going to be ideal scenario when you get a decent high, low, high or a low, high, low. But again, sometimes you need to finesse it a little bit. And I will show you an example in that as well that's currently playing out in the markets. Abraham saying, hope that, sir, demo how to correctly draw pitchforks in trading. Yeah, so definitely take a look at that course. I have a whole hour-long webinar on that. And again, every morning at 8:30 Eastern, guys, on the morning weekly strategy webinar on daily effects. Okay, so what would be the proper entry, Lawrence is saying? So Lawrence, depends on your time frame, right? This kind of analysis is helpful for everyone. If you're holding the longs, this is where you're taking some off and you're looking to put a break-even stop or better. You're coming off of uptrend resistance. If you're a short-term trader, you're looking for exhaustion here. You're looking for an outside day reversal, maybe an RSI break, maybe an opening range break for the weaker month. That gives you targets here, targets here. Again, same thing here. Before you start taking longs, you want to see a break of downtrend support, resistance. And I'll show you an example of that as well. So Lawrence, stick with me. I got more to come up. So here's a quick breakdown for the pitchforks, guys. Just quick key reference points you want to keep in mind. Uptrends, like I said, reference points oftentimes should, not always, be a low, high, low. In a downtrend, the pitchfork reference point should be a high, low, high. When price approaches the median line, it's either going to reverse and pull back to trend support or resistance, or, as I showed you in the previous example, if it breaks, it should trade right through the median line and head for the upper or lower parallel, depending on the trade you're in. And I'll show you examples in a moment. As always, stress the slope. The most important thing is the slope. That's all that matters. Have you seen inflection off that slope? Have you seen pivots off that slope? Has breaks of that slope offered acceleration in price? These are the things we're looking for to help identify. Okay, a quick look at multi-time frame. So here's an example of a chart. You were looking at multi-month lows. So you're at lateral support, but you were also at downtrend support, right? One touch, two touch, speculative, a third touch failed. So if you take a parallel to the lows, lo and behold, one touch, two touch, three touch, 136.75 ended up being important support. What do we do here? Do I just buy? Not yet. We're going to drill down deeper. Here's the near-term focus of that drop. I had a really nice descending channel, right? I don't know if this is a real legit channel because there's only 2 points of reference. But if this breaks, here's a low, high, low. If we break the upside, you're looking for a median line. This is the 75% parallel. These are just quadrants. So these are all 25% parallel, 50, 75% parallel, upper parallel. We look for a break of downtrend resistance first. Once we get it, that's your focus. That's your focus. And again, in this example, it played out like clockwork. You came into the median line and failed, but where did you find support? Right at former resistance. Median line resistance, break, upper parallel support, median line support, upper parallel resistance, median line support, boom. It's important to note, something I also give my traders, so always a quick, good tidbit, a breach of uptrend resistance oftentimes can be the sharpest part of the rally, okay? And a break of downtrend support can oftentimes be the biggest part of the drop. It's almost counterintuitive because people are saying, wow, it's been rallying. If it breaks here, wow, you want to look for resistance because it can't keep going up. No, actually, when you break uptrend resistance like here, that's actually when the market's got enough momentum behind it, the cascade effect. Everyone who was looking for that resistance there failed. All those stops getting pulled out actually fuels the rally even more. Raj is saying, what time frames do you use pitchforks on? Thanks, Raj. Great question. All time frames. Okay. Again, for my purposes, Raj, my humble opinion, I have my weekly, my daily, and then my 2-hour, okay, or hourly charts. When you're looking to execute, drill down. Go ahead into the 10 and the 5-minute. I got no problem with that. But for the purposes of mapping out your levels that you're actually going to trade off of, I like to stick with the 1-hour, 2-hour charts, somewhere in that range, Raj, where you see enough price action, but you don't get all the volatility of, you know, a 15 or 30-minute chart. Good question. As far as the slopes are concerned, though, those are my 3 major time frames that I'm looking at. Okay, does that make sense? All right, so convergences. Okay, everything that we've talked about so far, lateral levels of support, Fibonacci, pitchforks, or basic trend lines, when these converge, that's where the power is, right? That's where that bread is really baked, right? You got all the right ingredients. So a region where lateral support resistance converges on a trend line, a pitchfork, the slope of the market, okay? Be on the lookout for decisive price action heading into that region. So when you're heading into a confluence zone, you're going to want to reduce the position of the trade that you're in. If you're looking for a fade opportunity, that's actually where the market has the most inflection. So it's a good area to look for more significant reactions. Again, the breach oftentimes will yield an accelerated breakout. Rejection will oftentimes give a nice significant reversal or a rebound. And all of these, the more things are converging on that region, the more important it is. More attractive the risk to reward ratio is typically. It works on virtually all time frames. Again, I say that with just a quick note that as the tighter the time frame you get, the lesser impact these will have, but certainly they can be used on pretty much any time frame. And mind the close to validate the break. That's always an important thing. If I have a trend line on a daily chart as resistance, I'm going to need a daily close above or below to break. If I'm looking at a trend line on an hourly chart, I'm going to need a daily close above or below for that to validate that break. Does that make sense, guys? So mind the closes. Always mind the closes. Raj says, thank you. Hey, you're more than welcome. So let's look at some real life examples. So first, just a couple of examples from previous in price action, and then we'll go into the live charts in a moment. Here was dollar CAD. This was a big trade last couple of years back. It's 2019, right? We were holding a near-term resistance level at the June high day close, 33.40. We were in a strong uptrend. If this thing breaks, right, you're looking for the median line. You're looking for this slope parallel. By the way, in this one, this was actually the 618 of the slope. The breach gave us a really nice rally right into that 36.47 level. Break of the median line, that closed above. There was the rally. Into Confluence resistance at 36.47, the 2017 high day close, the 618 ratio. So you had a confluence there of Fibonacci, lateral level, and slope. Well, that was actually a really nice area to play the pullback. Where's your first area of support? Well, that's simple. It's at the 236 retracement would be first zone. Like I said, I'm not a big fan of 236s, but wait a second. When the 236 converges on the median line, you got another confluence support zone. If we break 34.56, looking for the move lower into 33.27. There was the break. It was an accelerated drop because, again, it was a confluence zone just like this was. You're looking for a 38.2 on your initial target. 618, the key fib ratio, converged on slope all the way down 31.19. Now, it's important to note that when the market changes, we need to change too. And that happened in the drop right after, okay? The market dropped broke that 618, but didn't make it to the lower parallel. It didn't make it to that 618. Do I just hang on to the short and cross my fingers and hope this works? No, hope is not a strategy. I mean, it's an important thing to have in life, but it's not a strategy in trading, right? So I want to know if this bounces from here, where am I going to find resistance? Well, quick retracement of that drop gives you a 38.2 at the 33.65 level. That would be your first area to look for resistance. If that holds, we're right back on 31.19. Well, held like a charm. Turn lower, you're looking for the slope, you're looking for that 618. Now, what did we just talk about? We talked about fib retracements within the range, but now we have a possible breakout, right? Or we have a possible near-term trend. So instead of me hanging on to that 31.19 level, I can take a quick extension. 1, 2, 3. The 618 of that extension ended up being a little lower, so giving you even better target down at 30.75. And eventually, that thing is exactly where this thing slammed into. So important was that 618 extension convergence on a parallel that you saw a massive rip higher. So just going through 2-3 months of time frame on the daily charts to kind of walk through the methodology of how you're applying these techniques. Let me know if you have any questions on that. I think it'll be much more beneficial if you're a little lost here, Jason. I'm with you. I'm going to give you a couple more examples and we'll look at live charts. So DXY, you guys, if you've been in the morning webinars with me for the last 3 years, you know what I'm talking about. This slope was a basic slope off the May 2011 low and the 2014 low, right? If you take a parallel of that and extend it to the high, it gave you a reference point just below 90 as your targeted resistance. If this breaks, what should we be expecting? Acceleration, a breach of uptrend resistance. We got the break, we got the close, there was the rip. Now, again, for this example, just to get the slope concept down, again, once we mastered a high, we tried again at that high, we failed with an outside weekly reversal off the high. Take that same slope with still support. So if you had kind of forgotten this slope after the breakout, you're just focused on near-term price action, this pullback would have been oblivious to the fact that we're still along this same gradient. If this doesn't blow your mind, keep paying attention, because we took that same slope, we took it to the high in 2015. That means we should be looking for resistance along this plane. Look where we found resistance. 2017, we turned just ahead. This, my friends, is called a raised ceiling. If the market rips and you get multiple attempts right ahead of that slope, oftentimes that's an exhaustive trade. You're looking for the pullback. Where's support? It's the same slope. It's the same slope. Well, this time when we got there, we broke. And that was resistance. Where's resistance now? Along this plane. Same slope, guys, from the 2014 low. You can't make this stuff up. And we rode this trend line for months. Resistance, 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 before inevitably seeing a breakout of that trend. Again, finding resistance at just the same slope, guys. And this played out. You guys know the story for DXY. We eventually bounced off that. Then this turned and broke lower, and it's been sort of a sell-off ever since. I'll show you the live charts in a moment. Guys, we've taken this out. We're down here. It's actually still in play, and I'll show you that in a moment. Quick recap on what we talked about. Confluence zones and price and time. That's what the focus is. We're not just looking for lateral levels. We're not just looking for slope. We're not just looking for Fibonacci. We're looking for where those things converge. Why does that matter? Well, it's giving you not just an indication on what price matters, but it tells you on when that price matters. And that's the biggest misconception people have about trend lines. They're giving you more of a time value, right? And when you have a lateral level that converges on it, that's even more. That's just, if you got the yeast and you got the dough and you got the water, that's the salt, right? That's the garlic you can add in. The more technical factors that you put to back up your thesis, the greater conviction you have on the trade. Does that make sense? Good questions here. Someone's asking, can you post the link to the register? Oh, for the webinars. Yeah, sure. I'll give you that in just a moment. But let's look at some live charts. For those of you who want to register for the Monday morning webinar in Daily FX, the weekly strategy webinar, there's a link for you in the box. But let's look at some live charts here to get a better view. Big kahuna, everyone's looking at it right now. Gold. Here's gold on the weekly charts, okay? Are there particular times of the trading day when certain types of technical analysis work better or are more effective than others? Genesis is asking. Yeah, actually there is, Genesis. I like to trade the crossovers. So the European crossover into the New York Open, then right back into the European close here in New York, oftentimes will be the terminus of the move. And actually those would be a nice play. Try to avoid dead sessions between the US close and the Asian Open. Not the best time to get involved with near-term strategies, but typically the opening range of each session. So whether it's the Asia session, European session, or the US session, that first hour, hour and a half, typically will be the tell for the price action. So just my humble opinion, Genesis, on timing wise. But what I wanted to go over with you here is, and again, if you've been in the morning webinars, we've talked about this at length, okay? The high close from back in 2011 from the former record was 1909. The 618 of the decline from last year's high was 1922. The median line for the low, high, low was right there, guys. The high registered at 1916. We were looking between 1909 and 1922. It registered at 1916. Uptrend resistance. You're looking for the move lower. First area of support was right here at the 2021 high week close. That was January. You had the 100-day moving average in there. You had upslope support in there. That broke last week. Look where we grinded into a low. Uptrend support, 618 of the rally. Confluence zone. Multi-time frame analysis. This is from the weekly charts, guys. This is from 1,000 feet up. What does the daily chart look like? Well, that was even cleaner. Same slope. Here is the open of the month. We peaked right into resistance. A monthly opening range took shape right below the monthly open, which was 1905. That break, clearing the monthly range lows, clearing uptrend support. You're looking for a drop towards 1764, 1767. That's where we bottomed out last week. This is absolutely critical support for gold. A daily close sub 1764 at this point would suggest a larger drop is underway towards 1730, 1682. That said, shorts are at risk while above this zone. Okay? This is the daily chart. Mike, how do I know what's going on here? Again, your multi-time frame analysis. Here's what the 2-hour looks like. So this decline was the shape of this pitchfork, of this decline. High, low, high. 75% parallel is a little messy, but the break, support at the 25, resistance at the median line, 38.2, confluence zone. We dropped into downtrend support, lateral support, 1764, 1769. That's still critical support for gold. Now, it's important to note, as per the question earlier, Jimmy, was that you asking about how do you identify tops and bottoms? This is an example. How do I know when the pressure is over? Well, that's easy. You need to see a break of uptrend, of downtrend, excuse me, resistance. So you have a confluence zone right now at 1795. That's the objective 2012 high, okay? Not Mike Boutros' opinion, not Daily FX's opinion, not Nadex's opinion. Fact, it converges on the median line we've been following for the last 5 days. That's near-term resistance. That's bearish invalidation, meaning if we breach 1825, you're no longer in the downtrend, right? So from a near-term trader, from my prospects, Here, I'm at support. I'm not looking to short into support. That didn't make any sense. However, if we get a recovery, I'm looking for a reaction here. If it fails, you're looking for the move lower. If that breaks, maybe you're still flat until here. You look to reassert it. But the point is, we can't get on the reversal trend of gold till we break downtrend resistance. And again, this is where the multi-time frame analysis shines. So without that clarity, without this clarity on the weekly charts, everyone would have just been piling on the gold short, just piling on, right? You got to know the degrees of trend you're trading within, and from that, you want to deduce an actual opportunity in near-term price action. Okay, so that's a look at one example. I also wanted to hit on Bitcoin because everyone's looking at this as if there's some sort of, voodoo under this trade. It's actually abiding extremely well. Today's lows was textbook, guys, textbook. So just yesterday in the webinar, we were talking about watch this trend line here. If we break this on a closed basis, the lower parallel converges on downtrend support at the 2021 yearly open at 28,999. Look where we just bottomed. Again, you can't make this stuff up. So on the initial break of this support zone, which was the 618 of that rally, which was the median line, you also had this is what, a 200-day? Yep, 200-day moving average. All of that was lined up right here. We broke right below it. The 618 extension held. Again, the 2021 low day close. All three of these levels are levels we've been saying every time you get into it, you basically want to shut out any shorts because it's big support. The yearly low day close, the yearly low, and this was a 618 extension. So all the circles that you see are areas of convergence. We used to have one back here, right? Oh, excuse me. We used to have one back here, hit ahead of schedule. Once dropped into the 618. The second time, again, failed right at the low day close. The third time, again, in that same range. Today's drop actually hit the yearly open and is poised to close back above that 2021 low day close. Suggests that this may be, in fact, a little bit more of an important near-term low. Again, not a trade recommendation from Daily FX IG or Nadex, but that's what the technical suggests. So the near-term drop in Bitcoin, we've been saying this for a while. All three of these levels are critical. We just bounced off the last one. Near-term resistance, basic retracement of the drop. Your first area of resistance is at the 38.2. That's at 33,467. Look for a reaction there. How many indicators are you using or is recommended? Eric, great question. There's something called paralysis by analysis, and it happens by way of traders who, I like Elliott, so they're Ellioticians, or I like Fibonacci, so they're Fibonacci guys. Then I see a cool webinar with someone using Donchian channels or any other thing you can think of. And every time they see something that, they just incorporate it into their charts, you'll get bombarded, okay, with perceived, I'm doing air quotes here, perceived signals all over the place. So no, there is definitely a limit to what you should have on your charts. Michael, I don't know what that answer is, brother. It's going to be different for you. It's going to be different for me. It's going to be different on everyone's take on the markets. Remember, guys, technical analysis, more than a science, it really is almost an art form. So I tend to work with the basics, Mike. I stick with trend lines, Fibonacci, and key lateral levels. That's all I need. Now, you'll see on all my charts, I use RSI. This is just a graphical visual representation, okay, of what the momentum looks like. You're looking for divergence when you're looking for areas of lows. You're looking for breaks above uptrend. If we're really strong uptrend, you want to see multiple breaks above uptrends. I guess the daily chart is a little bit clearer here. Little tricks in RSI that and I don't want to change, I can't keep going much longer here, but little tricks of RSI, Eric, that a lot of people don't know. In strong uptrends, RSI should be finding support at or ahead of 40, not 30. And again, don't take my word for it. Here's the uptrend in Bitcoin. Every pullback since the start of the year has essentially been at 40, at 40, at 40. This changed things. And guess what? Strong downtrends should find resistance at 60. Here's this failure ahead of 60, failure ahead of 60, failure ahead of 60. So using these little tidbits can really enhance your trading of how to interpret what you're seeing both in the oscillator and in price. Does that make sense? Jennifer is saying, can we stop using voodoo as a descriptor for something seemingly mysterious in these charts? There is current religious and spiritual practice with believers in tens and thousands of places around the world. Long distance high five. Yeah, I agree. I mean, again, there's nothing voodoo here. There's no witchcraft at play. But sometimes seeing is believing. And before you go embarking on any one strategy that you might have seen on Twitter or YouTube or whatever, look at the price. Look at price action. Let that speak to you more than the news, more than the headlines. You know, I get a lot of questions of people saying, how do I trade the news? Which, by the way, my colleague Chris Vecchio will be on shortly to describe that. But what is your expectation? The Fed says this. Does this change your opinion? Guys, with all due respect to the Fed, I could care less. I want to know when they're talking, and I want to know where price is, because it might spur some volatility, but it's certainly not going to change my opinion on what the technical standpoint looks like. Now, if we get some sort of release where the Fed charges a break of resistance or charges a break of support, yeah, we're changing our opinion, but it's not because of the Fed, it's because price broke resistance. So keep those two things separate in your mind. If I leave you with anything today, guys, it's the technicals are a study of price and market sentiment. The fundamentals, if as it were, these releases, these announcements are times that you could see increased volatility where you might be able to play your levels even better. But your focus on the charts needs to be on what the technicals are saying. Does that make sense, guys? William saying, great presentation, Michael. I look forward to checking out your Foundations of Technical Analysis, Building a Trading Strategy series. Cheers, William. Appreciate that. Glenn with a question here. Not really a question, he says, but maybe will help new traders. Whenever price rejects an area, this creates memory in traders' minds. When price reaches those memory spots, people, because shy of those areas, and this causes more rejection of that area. This is what actually creates support and resistance. Glenn, I couldn't have put it in a better succinct way, right? That's the psychology. And back to my previous statement on what we're actually looking at when we're looking at technicals, right? That's the psychology behind it, absolutely. And the more times that the market has seen support hold or seen resistance hold, again, when the break happens, all those traders are caught off foot. That's the cascade that gives you the rip higher, right? As opposed to the meander higher. So that in your multi-time frame analysis approach. One last thing I just wanted to go over real quick, guys, just because we're in it right now. SPX, I mean, what a play. So the arrows that you see in red are actually the last instances that we saw of outside daily reversal. What's an outside daily reversal? It took out the previous day's highs and closed below the previous day's close. So we had one in February, okay, of this year, charge a nice decline. Again, in March of this year, charge another decline. I think I took the averages of these. The average decline on the outside reversal candle has been somewhere in the range of 4%. Here's what's going on now. We got an outside day reversal on Friday, followed by an outside day reversal yesterday. So what does that mean? Does that negate the previous signal? Might very well. Guys, this orange line in my weekly charts, the magenta line will always be the yearly open. This was a break of the yearly opening range on a weekly close basis last week. Objectively, from a technical standpoint, you should be looking lower below 4180. The fact that we reversed and taken all this out puts the same levels in play that we were looking at. Immediate resistance today, right now, my humble opinion, 42.45 into 42.47. That's the high record high day close. We're there now. Look for a reaction here today. Look for reaction here today. Abraham saying, sorry, out of topic question. Is there a technical analysis based on support and demand? So I think you mean, I'm not sure what your question means, Abraham, to be quite honest with you.
I think it's
Support
going
and
after supply and demand.
supply and demand. Yes. Okay. So you can absolutely. There's merits to supply and demand, Abraham. Not so much in OTC markets, right? Not so much in over-the-counter markets. So in FX, you're not going to really see that give you too much of a tell. Now, IG has our client sentiment index, which is giving you what our client base is doing. And based on those studies, that can be a sentiment driver for you. But certainly from a technical standpoint, now our focus is basically on what price is saying. So guys, I'll leave you with that. I thank all of you for your participation. Some great questions. I hope you found this to be helpful. We'll wrap it up here, take a quick minute break, and I'll pass it back to you, Todd.